From Wall Street to Main Street, this is LALATE.
It's a major night on evenings LALATE as the new LALATE launched earlier today, and the market at that time had gone from 300 points down to 700 points down. But by the time that morning's LALATE went live on air, newly debuted, guess what happened? The markets tumbled nearly 900 points. And that was nearly in a one broadcast. What happened? All the latest details across the board in tonight's recording. Plus, we'll be looking at why this market got so soft so quickly in a day in which Snap and Tesla were supposed to be the only stories and got very quickly across the board. The breaking news is that we got continuing jobless claims, not particularly any different. New jobless claims improving. That was good news. But then on the bad news, we had horrible retail sales numbers. Exactly what Goldman Sachs had predicted earlier this week. Exactly what was reported on this channel. In the month of November, we expected a drop of 3%. 0.3%. We felt 0.6%. Not particularly good. And what happened to the market was we were down 300 points initially, then 600 points, then 900 points. And in one broadcast on Mornings LALATE, we went on air at 600 points down in less than 45 minutes. We fell all the way to 900 points down. This is a view of the reaction to J. Powell, that interest rate spike yesterday. And this is why I had to get all those incredible stimulus checks. These huge stimulus checks featured over this 1 hour broadcast. Become a member, join this channel, and get ready to learn and earn for these stimulus checks in this recording are $3,000 a month, 5 checks per month, and 18 months of stimulus checks. But the situation in the markets today is far from over, as many companies are now trying to digest what J. Powell said, and Wall Street has not yet digested it at all, because the market is actually betting in or pricing in a soft landing, and we're likely not going to have a soft landing, we're going to have a hard landing, and they're also pricing in a soft recession. We're likely not to have that as well. Earnings recession is just around the corner when fourth quarter numbers come in, and we'll have a breaking news on those numbers as well, what to expect. But boy, from the shores of Santa Monica, California, it's a big show, and it's unlike any show ever. And thank you to the viewers who inspired me to relaunch this channel. This morning, Mornings LALATE went on air, and we fell from 300 points down to 900 points in one broadcast. This is why you need to learn and earn, and this is why you need to tune into a channel that has all the breaking news for you as it happens and when it happens, and the prediction as well. Because remember, you and I had predicted this was going to happen. From the shores of Santa Monica, California, it's evenings. Good evening, everybody. Tonight, everyone is reacting to the news from J. Powell and the Federal Reserve, but more importantly, we're reacting to those very weak numbers on retail. It was a double whammy, and the markets were not prepared for it at all. We started the day with the markets expected to be down. I had told you that the markets are always down the day after J. Powell speaks. And I was predicting the markets to be down about 200, 300 points. We talked about this all week long. J. Powell yesterday announcing that 50 basis point increase for the Federal Reserve. What happened? Well, the markets initially opened up 300 points down. That was a little bit weaker than expected. Then came this number, the retail sales number. And Wall Street didn't like it. And suddenly the market fell dramatically, down to 600 points at the time afternoon's LALATE was taped, and right about the time that morning's LALATE was about to go on air. Just when morning's LALATE was about to start at about 9 o'clock Pacific Standard Time, the market fell from this number to 800 points down, and I went on air. Guess what happened? And if you didn't watch it, let me recap with you, because I've never seen anything like this. So I went on air saying, hi, we are about 600 points down just a few minutes ago, and we're about to be 800 points down. Press record, I go live. Then I start talking about the markets, and I look up and I look at the Dow, 850 in 15 minutes. We go to commercial break in the middle of that 45-minute run show. Suddenly we're at 875. Come back from commercial break. We're about to end the show. I said, let me give you a recap on the market. I go speechless. 900 points down. So it went from about 600, 700 points down when the show started to 900 points 45 minutes later. It was a very, very austere drop. And why else was it better timing? Because it was the relaunch of the brand new LALATE that features more about what's going on with your money than ever before in a single recording. So why did the market fall so dramatically? And why was this not anticipated, or was it anticipated? Earlier this week, we had two things happening. First, we had Goldman Sachs saying that the numbers for retail were horrible in November. A few analysts also said that as well. The former head of Toys R Us was on news today, and he's a smart guy. And he said the Black Friday numbers were horrible. They were horrible. We all knew they were horrible. The online sales that said they had gone up 2% year to date is not anything to celebrate, because they usually go up 20% year to date. That's online sales, not in the store. He said in the store numbers were horrible for Black Friday. We all knew this. We did not understand why people were saying Black Friday was good. So Goldman Sachs said, Black Friday numbers were horrible. November was down compared to the prior month of October. That is Halloween. And they said this month, December, is going to be even weaker. On Friday, Lululemon said the same thing as well. They said there's big macroeconomic problems that's causing people not to come to the stores. So guess what happened when the market opened today? This number came in, and it was no surprise to anyone at Goldman Sachs, or no surprise to anyone who watches this channel, because this is what we have been talking about since that Goldman Sachs report. Retail sales for the month of November, look how bad these are. These are really horrible, folks. November is supposed to be one of the biggest retail days of the entire year. Retailers are dependent upon the earnings that they make in the month of October, November, December. If they don't make money then, they may not make enough money for the entire year. Some retailers' entire year is dependent upon the earnings from 3 months. And they don't make money in 3 months, big trouble. Look how bad this is. Wall Street knew it was not going to be good, down 3%, but it came in down 6%. And that is why the market opened at 300 points down, then dropped very quickly to 600 points down, and then literally headed to 900 points down. At the time of this broadcast, which is being taped shortly after noontime, we are now hovering about 700 points down. We had gone even further early in the day. And we still have 1 hour in the trading day done before this show is finished taping. Wow. Now, the problem at issue is that Wall Street may not be assessing the risk of what Jay Powell and company did yesterday. Let's go over the latest details on that. Jay Powell and company yesterday announced a 50 basis point increase. No surprise there. We all knew that was happening. And Jay Powell said we're going to stay with it for this a while. No surprise there as well. But here's the problem. And this is a very, very big problem. The stock market has only assessed a risk of 10% down from here. 10% down from here. 10% down from here is basically assessing the situation, saying it's going to be a soft landing. And number two, it's going to be a soft recession. Well, here's the problem. Number one, all the indications today suggest it's not going to be a soft landing. How can you orchestrate a soft landing? Labor's higher. Inflation's still up. Jay Powell still has to raise his rates. It's not going to be a soft landing. Even Jay Powell says we got to do this 2 more years. Soft landing seems very, very unlikely today. Number two, soft recession, hard recession. Very unlikely. In February of this year, I was the only financial reporter to say that they were going into recession, and I put that start date in January. Now the headline story everywhere is the markets believe a recession is just imminent or certainly underway. So with all that, the markets have put a 10% downside for stocks, which would be a soft landing and a soft recession, when it looks like we're not going to have a soft landing and not going to have soft recession, rather a hard recession, 2-year recession. That means we could go down another 40%, which is where those valuations should be in a recession and a hard landing. And that is why it's not particularly looking good. Let's go over all the breaking news, because there is a lot of it tonight. First, those retail numbers are really not a surprise, but really also not good. This is why the markets took a tumble, because the double whammo of Jay Powell's comments yesterday of raising the 50 basis point at the December FOMC meeting, plus the retail sales coming in very weak in a critical month in which they have to deliver big numbers, did not happen. And that was a double whammo to start the day. The day also started with this news, which is actually quite good news for purposes of labor, but bad news if you're looking at Jay Powell. It's good news because the new jobless claims number was really low, 211,000, when we were 230,000 last week. The continuing jobless claims number is also a good number because it didn't go higher. You want to recap? Let's recap across the board. This is what happened to unemployment over the last 6 months. Went from 140 all the way up to 260 and then fell back down to 220 and then moved to 230. So you and I certainly expected unemployment new jobless claims released every Thursday by the Department of Labor today to stay about 230. It didn't. It actually went down to 211. That's good news. Second good news in the breaking news report today of labor, continuing jobless claims. Last week, 1.67. This week, 1.67. No change. So that is promising. Now, it's also bad news in another front. Why? Because Jay Powell's going to make it go through the roof now. Jay Powell has made it very clear that the Federal Reserve's policy is to reduce inflation by raising unemployment. So now that he sees that he has tried to reduce inflation, hasn't done a lot of it, and he sees that that labor is holding up, that jobless claims have not gotten worse, in fact, they've improved, and that long-term unemployment claims did not get worse compared to the prior week, guess what Jay Powell's thinking? Can come in more aggressively and stay aggressively with these interest rate spikes because labor's holding up. So get ready. And that is why you got to be careful about all these things and get stimulus checks. Big stimulus checks Americans are available to Americans that have been available since the month of March, and they're huge. And over this 1 hour broadcast, we're going to go over these incredible stimulus checks. You got to pounce to get them, move to groove, learn to earn, and we're going to show you how to get these incredible stimulus checks in this recording tonight. And there are a lot of them. $300,000 of stimulus checks, 300 different checks, 5 checks per month, $30,000 a month, and I'm going to show you how to get those incredible stimulus checks in today's recording. But let's go into the other breaking news story that we're starting with as well. So we started the day with this as what we thought was going to be the big news story. Started the day when we learned that on Monday and Tuesday this week, Elon Musk, who had once said just a few weeks ago he was done selling Tesla shares for 2022, sold some more Tesla shares. How much more did he sell? 3.6 billion more. The stock is already down 55% year to date, so he sold at the low. The market reacted negatively to the news initially. 1.2 down went net Tesla, but then it popped up 1.1 earlier in the day. Snap, however, is having big problems. Snap was downgraded today, and that Snap for downgrade took the stock even lower. Warner Brothers, meantime, is expecting cost cutting, and it could incur $3.5 billion. And Western Digital, in turn, was downgraded from neutral to sell by Goldman today as well. There was a lot of downgrades today, and among them was Jefferies downgrading Snap. And how bad a downgrade was that? From buy to hold. My goodness. And that was how the day started. It continued with the markets really trying to digest those retail numbers and not happy with this. Jay Powell. They were not happy with Jay Powell, and here were some of the reactions of the commentary by analysts today. I think you should not do any more hikes after today. I think there has been some progress on inflation, says Double Lines Capital CEO Jeffrey Conlock. Now, here's the problem with that. Number one, Jay Powell needs to get inflation to 2%. We're at 7.1, says the CPI last Monday. And this CEO is basically saying, stop. No, there's no guarantee that inflation is going to get to 2 from 7.1 right now. What's going to keep it going down to 2 when we've only moved it from 8 to 7.1 an entire year? Number two, he says that inflation's moving down, but moving is a very vague analysis. It's like saying you live close to me, you live far from me. Are you 2 hours away? You 2 miles away? And the situation here at hand is that inflation has not come down substantially. We'll go over those CPI numbers, those inflationary numbers from Monday in just a second. But the only things that have really come down for inflation in this economy have been consumer staples, the goods you buy, like the TV, the appliance, the washer, dryer, the food, the rent, up, the air up. So the big items are really up. And so to say that inflation is coming down, not enough of the inflationary items are coming down, and not enough at all. That's why it's so important to stay on point, and that's why it's important to get these incredible stimulus checks. Let's look at those big stimulus checks. You need to get as much stimulus, raise your savings, and remove your adjustable rate debts. Tonight, we learned something brand new. This is just in the last hour. There's a series of new reports just in the last hour that says default levels on credit cards is growing very quickly in the last 30 days. A new report says that credit card defaults, which is what we were waiting to see, is growing faster than expected. Spending is going to slow down, confidence is going to slow down, and so is income. But what's at issue is that people have not raised enough savings in their accounts during the last few months, and those savings are disappearing very quickly. Massive stimulus checks are available for you to offset this. 18 months of stimulus checks, 5 stimulus checks per month, and $3,000 a month. Let's look at those incredible checks right now. These were done by executive action of Joseph Biden starting in the month of March. And they started with checks A, B, and C, $100,000 of stimulus checks. I'm going to show you what these are in a second. And they start with stimulus checks A, B, and C. Passed by in March, you can qualify. The only two factors at issue is that you make $75,000 less if you're single, and if you're married, you make $150,000 less, and that's it. It's for the federal government. Don't worry about anything else. Just go get it. I'll show you how to get it in just a second. Then came Congress, who passed other checks, E through K, bringing us to hundreds of checks. And where are they all? Those plus L and M, N and O, P and Q are the stimulus checks yours truly has found for you, and they are federal stimulus, and they're in the LALATE newsletter. The LALATE newsletter is for members, delivered from me to you Monday through Friday, 7 o'clock Pacific, 10 o'clock Eastern Standard Time, via the YouTube alert. And go down on that YouTube alert until you see the guy with the surfboard. There he is, past the guy with the surfboard. It says click and view post. Click and view post, and it sends you right into the membership newsletter. Delivered exactly at 7 o'clock my time, 10 o'clock Eastern Standard Time, 9 o'clock Central. Go get those incredible stimulus checks. And without a delay, let's look at those incredible stimulus checks right now. Remember, these are $300,000 of checks. They're paying out fast. 2 months, in some cases, 18 months of checks, $3,000 a month, and 5 checks per month. Let's look at those big, bold, beautiful checks one at a time, starting with stimulus check A. Stimulus check A is $6,500 to $12,000 stimulus check for you. And it's absolutely wonderful. Single individual, $75,000 less, go get it. Married couple, $150,000 less, go get it. Stimulus check A. How do you get it? Join this channel, become a member, then get that newsletter, 7 o'clock Pacific, 10 o'clock Eastern, 9 o'clock Central. Go down the YouTube alert, you see the link that says view post, go right into the newsletter, and go get check A. Then get check B, $15,000 to $80,000. This is the check that's really putting people over the edge, because they're getting a lot of money for this check. 18 months, 5 checks per month. This is the check that's really winning. How do you get these incredible sums of money? Become a member, join this channel, get the newsletter, go right and apply for check B. You're not done there yet. You go with check C in the newsletter. Next up is check C. It tells you who to call, what to say, and how to say it. 12 different places to get those incredible check C's. For what? It starts with rent. And you want $30,000 of rent, then go get some stimulus check C's right today. Join the channel. Then, what comes after that? Utilities. Do you want $15,000 of utilities? Then join the channel and get those incredible check C's for utilities. That's what Mark's brother-in-law got. Next up is SNAP. Same brother-in-law is getting $250,000 over 10 years. And then combinations of checks. You ready for this? Mark has gotten $32,000 of stimulus checks, but then I told him to go get more. And then Mark brought it to $50,000 of stimulus checks. Then $100,000, and then $166,000. Well, what happened after that? Lorraine got $155,000, growing from 105. What do? You go into this video, you subscribe, you go into this video, join the channel, become a member. You open that membership newsletter, delivered via YouTube alerts from me to you, Monday through Friday, 7 o'clock Pacific Standard Time, and go right in and grab those tens of thousands of dollars. Now, we're not done there yet, because those are just the first 3 checks done by Joseph Biden. Stimulus checks A, B, and C. They're great. They're a lot of money. But we're not done there yet. We have more checks for you, and those are checks E through K and L to Q. So after the President of the United States, along came Congress, and they did the next checks, and those are stimulus checks E. A $7,500 stimulus check. How do I get it? In the membership newsletter. Down at stimulus check E. F, $4,000 stimulus check. Love it. Then we go to stimulus check G, a beautiful 30% off. H, $2,000 stimulus check. Incredible. Stimulus check I and J and H. First, G is 30% off. H is $2,000. I is $8,000 stimulus check, and J is an $8,000 stimulus check. Then we go to stimulus check K, $14,000. Incredible. Next over to L, M, N, and O, and P, and Q. Stimulus check L is $100,000 on average of loan interest-free money. M, a $4,000 stimulus check. Then N, one of the best stimulus checks there is. A brand new tablet, brand new computer, brand new laptop, all for you during this holiday season. What could be better Christmas gift? And free internet. Stimulus O, zero down payment, zero closing costs. And then we go to stimulus P and stimulus Q. P is a 3% for a refi, and Q is an $8,000 stimulus check. And there you go. Those are your incredible stimulus checks. Let's recap and learn a little bit more about them right now. First, these incredible stimulus checks are huge. A larger stimulus check, $100,000. Smallest stimulus check, $8,000. The totality, about $300,000 of stimulus checks. How many? 300 different stimulus checks. Number two, how do I get them? Step one, you go onto this channel, you become a member, get that incredible membership newsletter from me to you. And in that membership newsletter written by me, I have found these stimulus checks for you. Taken hours and hours of research to find these stimulus checks for you, and I put them in that newsletter. All you do is go down and click and apply. Go down and click and apply, with the exception of check C, in which I have 12 places for you to reach out to. Make sure you reach out to all 12 places. Then, what's important to remember is also to subscribe, and make sure you have that bell set to all notifications, to all on. The largest check, $100,000. Smallest check, $8,000. What are these stimulus checks for? The rent, the utilities, the mortgage assistance, the computer, the internet, the car, the home appliances, the home repairs, and just a lot of incredible stuff. They're all in the membership newsletter. And again, where is that membership newsletter? The membership newsletter is delivered from me to you via YouTube alerts. First, watch for that YouTube alert at 7 o'clock Pacific Standard Time, my time, which is the West Coast, which is 10 o'clock New York, New Jersey, Boston, and that is 9 o'clock Central, like Illinois and Missouri. You get that YouTube alert at that exact point, go down past the guy at the surfboard, click and view posts, and it sends you right into the membership newsletter and start applying for those incredible checks. Let's go back into the breaking news that is so important tonight and shows you why you got to get those incredible stimulus checks. And it's this graphic. Imagine that we started the day 300 points down, then 700 points down, then grew to 900 points down. So let's see where we are right now as we approach nearly the halfway point in today's broadcast. Again, this show is being taped shortly, 35 minutes before the markets close. Where is the markets right now? So we started 670 down. Where are we right now? We are still about 670 down. So we are holding up a little bit compared to that horrific 900-point drop earlier in the day. The NASDAQ, not so much. The NASDAQ is still 326 down, which was what it was as lowest of the lows today. Compare that to earlier today, 258. Where are the big hits right today? Those big hits right today are being felt broadly across the board. And let me show you some of the data we see right now. Some of the data we see right now is just across the board. Alphabet, Amazon, parent company of Google, Meta, formerly Facebook, all getting hurt really badly today. Let's look at some of the data and what we see right at the moment. So we have some breaking news just in the last 3 minutes. Here's a brand new report written just 2 minutes after I went on air with you. The equity market's reaction is now factoring in a recession and rejecting the possibility of a soft landing. Folks, this is just breaking news since the show started recording. Mentioned recently by Powell and at the Brookings Institute. Writes Crosby, global strategist at LPL Financial. So what Quincy is saying is that Jay Powell's attempt to make you believe that he can pull off a soft landing is no longer believable. I've always told you he's never going to pull off a soft landing. I always told you we're going to have a hard recession. Now, Crosby is saying that the markets agree. The markets agree with me that it's going to be a hard landing, and it's not going to be. It's going to be it's going to be a dark, hard recession. The tug of war between the Fed and the markets is squarely on the market side. The slowdown is not transitory, and the Fed will be forced to act before 2024. Fascinating analysis across the board. Now, here is what's important to understand is that this situation is very fluid, and that the Dow could fall even more dramatically. Remember what tonight is. Tonight's taping is on December 15th. This is the second day of what should be a Santa Claus rally. The Santa Claus rally historically starts on the 10th trading day of the month of December every year, even in a recession, even in a bear market. Well, guess what's happening? Yeah, we're down 900 points, 600 points, 700 points. So we're certainly not experiencing a bear market Santa Claus rally straight up, and that's critical because January is usually a horrible month straight down. We are down in a Santa Claus rally normal environment. Yeah, it's really not good. That 10th trading day was December 14th, and that means that we should have been trading already higher today. Markets are prone to wider swings in the final 2 weeks, says a brand new report as well minutes ago. And this is from Brian Price of Commonwealth Financial Markets. This came in just after this show started taping. The last 2 weeks of this year will be interesting as the market might be prone to wider swings given the absence of important economic data releases and the fact that many traders will now be on holiday. They go on vacation. The bad economic data comes in, and there's no one to trade up the stock. That's not a good mixture. If we do not see uninspiring earnings seasons, then it's hard to see how we don't have a continuation of the volatile trading environment that characterized much of 2022. What do we see in the last hour of trading right now? Because there is 1 hour at the time of this broadcast being taped. The market is not yet closed. At the time of this taping, the market is off of that 900-point drop. It's hovering about a 709, 620. It's off its all-time lows. But here's Josh Brown. I adore Josh Brown. Josh Brown earlier today said it's going to be a really hard recession. Anyone that thinks a soft recession is just, pie in the sky. But here's Josh Brown on Disney. Disney is having its worst year in many, many years. And it announced earlier today something else, that it was going to have to experience a massive cost-cutting event, and that was going to hurt it negatively. He says, if you're trading Disney, it's like a falling knife strategy. I love that. Disney is the ultimate storytelling brand, and Iger's return is just within that narrative. We've already seen that story being told. The stock has lost 41% this year alone. Here comes Tesla. Now, Tesla has been very, very volatile today alone. The stock is down 50% this year, and as though the stock could not get any worse... Here we go. Here is how Tesla was earlier in the day when we learned that Elon Musk was selling all those enormous shares. Elon Musk had told us early in the year that he was done, earlier this winter, that he was done selling any more Tesla shares for the year. Well, that apparently is not the case, because between Monday and Tuesday, he sold 3.6 billion more shares. The stock was down 1.2 in pre-market trading before it actually reversed and went up 1 percentage point. Again, the stock is down 55% this year to date. Okay, so can the story get worse? Apparently it can. The latest details is a brand new report released in the last hour from RBC Capital Markets. And that concern is the diversion of attention from Tesla to Twitter. And investors are concerned about demand pricing, auto GMs, and Twitter's distractions impact on Tesla's brand, writes analyst Joseph Spack at RBC Capital. But we see the narrative of Tesla as best positioned in the EV market. Shares are hovering at 157 right now. So what is Spack doing? He is now slashing his price target on the stock from $325 to $225. Well, It's just getting started. It's just getting started. One of the very confusing stories we have not seen in a very long time, I don't think I've ever seen anything like this, was a story that came in today from Netflix. And boy, folks, I thought I've seen it all until I saw the story from Netflix today. The story from Netflix today was really shocking when we learned that the way Netflix was doing its advertising business was telling advertisers we have a target of how many views the video you're advertising on will generate by ad space based upon that price, that view target. So you have a video and Netflix tells the advertiser, we expect this many views by advertisement based upon our representation to you. It's a little bit different than in other industries. But let me tell you what happened. Netflix missed on those targets. And guess what Netflix said today, according to a report? According to a report, Netflix agreed to return money back to the advertisers because Netflix reportedly did not meet those viewership representations and targets that they had indicated to the advertisers. Oh boy, that's something I've never seen before. Normally, advertisement is based upon how many views happen. So you don't buy it in advance of a representation. You say, okay, I buy view time, and if you have 10 views, I pay for 10 views. If you have 20 views, I view for 20 views. But here, Netflix sold based upon a representation of what they're going to get the advertisers and viewership, and didn't get it. Wow. We do not know in this market how many more businesses have done that type of modeling for earnings, because if they did, that is not good. Shares of Roblox are down 17% today as the gaming stock had big problems, and it was not having anything to do with J Bao or the retail sales numbers, because this is not a retail sales company at all. What happened in the latest details from Roblox, and this is since afternoon show. Roblox is down 17% right today after the company's November report showed slowing growth. They estimated the bookings were 222 million, up 5 or 7% compared to last year, but during November 2021, they grew 22% compared to the year before. Interesting. So they're up year to date 5%, but last year they were up 24% in 1 year. Communication services are among the big topics today, but again, Novavax was one of the stocks that really took hits. It took a 27% downward slide today after the proposed sale of stocks and common bonds were announced, and Warner Brothers Discovery stock was down 7% after it announced it's going to do a $1 billion restructuring. 5 stocks to 1 stocks were down today, and American Express got the top pick for 2023 from Wells Fargo. Wells Fargo says buy some, credit card companies as your big stock picks for 2023. I think that's a little bit predictable, don't you think? Credit card debit limits are the highest of a generation. Credit card defaults are now picking up. We learned tonight. Jamie Dimon told us earlier this last week that Americans do not have savings accounts to pay for these credit card limits, and those credit card debt limits are about to be exhausted, and that when those credit cards come due, they don't have the money. Oh boy, incredible. And that is where the markets are tonight. We're just getting started. Again, this is how the market looked early in the day. It's not how it looks right now. The market is hovering at about 7 points down with about 30 minutes left in the trading day. I'll have the latest recap for you on the markets when we come back in 60 seconds. But here first, here's a little bit about the community cage. See you back in 60 seconds as Evenings LA continues. If you want money right now, not 5 days from now, and not 5 weeks from now, then reach out to the community page. The volunteers can help you find that money for rent and utilities. That's at news.la.com/community. The community page features a series of volunteers who are viewers like you. They can help you find rent, utilities, SNAP, food benefits, mortgage assistance, and help you with eviction moratorium questions as well. Their Facebook, Twitter, and Instagram individuals reach out to them and indicate the city and state you're from, and they'll get back to you shortly. That's a community page. Volunteers working for you, viewers helping one another. Stay with LA for more. Join LALATE Daily for the excitement of the new LALATE live
daily. The excitement starts on mornings LALATE at 9 a.m. Home LALATE returns at 11 a.m. daily. And then afternoons LALATE at 1 p.m. Join us daily as the excitement continues live from Santa Monica on LALATE.
And the breaking news continues. The breaking news continues in tonight's evening's LA from the shores of Santa Monica, California. What a week it's been. We started the week with the Consumer Price Index. We continue with Jay Powell. We missed the Santa Claus rally. We hovered down a significant amount yesterday, and today fell as much as 900 points. We're just getting started. The reaction to the Federal Reserve's comments are not particularly where they should be, and in the big second half, we'll go over what the bond market is doing in their reaction to the Federal Reserve now that we understand the stock market. It's a big, bold show, and we're just getting started in tonight's evening's LA. How are you? Thank you for joining me on the rebranded, and the new look to LA. LA got a brand new look on mornings, afternoons, 3 o'clock, and evenings tonight, and I appreciate all the incredible viewers who were part of the think tank in putting together the new look to this channel. More soft refreshings to the channel coming in the next few days as well. The bond market is really on a strange course tonight, and what are they doing? The bond market is trading down. Federal Reserve raised rates yesterday, 50 basis points. If you raise rates, the bond market would only go up. Bond market went down. Bond market went down today, went down yesterday. Why? If you look at the Fed funds rate, which is where the Fed is taking this whole storyline, they're bringing it to 1.5, and the Fed funds rate, when lined up with the bond market, doesn't match. In fact, every time that Jay Powell's rose rates, the bond market has really lined up that well. And now they're becoming more distant than ever before. So there's three possibilities of what the bond traders are doing by not raising bond rates when the Federal Reserve raises their rates. Number one, they hear the Federal Reserve, but they're ignoring the Federal Reserve. Reason, maybe because they do not believe the Federal Reserve is going to do what they're going to say they're going to do eventually. Number two, the bond traders do not hear the Federal Reserve, ignore the Federal Reserve, and just do what they want to do. Or number three, the bond market hears what the Federal Reserve is saying, but they say we can't get those rates that high. No one really knows what's going on. And I got to tell you, of all the stories today, this is the story that left everyone speechless. They looked at it and said, that's like looking at a lobster shorts on the fashion runway in Paris and saying, who let that person in? You're just speechless. It doesn't make any sense. And you know how this works. Stocks go up, bonds go down. Bonds go down, stocks go up. Today, stocks went down, bonds went down, Federal Reserve went up. Make any sense? Absolutely makes no sense. And no one understands where this is going to end out. Now, here's what's important to understand with the stock market. This one's easy. In a recession, the stock market goes down 50%. In a hard recession, the stock market goes down 50%. In a soft recession, which is, 2 months mild recession, stock market may go down 15%. Where are we right now? We're down 10%. Soft recession likely? No. Soft landing likely? No. Hard landing likely? Yes. Hard recession likely? Yes. So the stock markets have not embedded the risk of 40% further down. Is that troubling? Yes. Is that scary? Absolutely. What about the bond market? The bond market has not assessed the risk of the Federal Reserve putting those rates to 1.5 with the Fed fund rate. Troubling? Absolutely yes. Now here's where it gets even more bizarre. What the Federal Reserve is doing and what works and doesn't work. The Federal Reserve is raising rates to get inflation down. But in that latest CPI report, there's a big question mark at issue. Let's look and see what's happening. The Federal Reserve wants to raise rates to get inflation down. But does it line up or does it not line up? In the latest CPI report released this Monday for inflation, what do we see? It was working. What Jay Powell's doing was working with consumer goods like the computers, the TV sets, and the home appliances. They're down in the latest CPI report. Good. So what Jay Powell's doing is working with those consumer goods. But the rest of the CPI report, and perhaps over 40% of the CPI's inflationary report of the number, those items were way up. meaning what J-POW is doing does not work with them. And what are they? They are rent, they are groceries, and they are airlines. Everything else in the CPI report was straight up. Here's the problem. Do the landlords that own apartment buildings care what J-POW does at the Federal Reserve? Absolutely not. Do the airlines care what J-POW does with interest rates when it comes to pricing a seat on a plane for domestic airfare? Absolutely not. And do the farm growers of heads of lettuce or the supermarkets that sell the heads of lettuce care what J-POW does with interest rates? Absolutely not. And that's really the problem we're having here, is that J-POW raising rates certainly works for appliances and computers and electronics and cell phones, but it doesn't work with those three other items. And those three items are the big culprit for inflation. So who can get the price of airline fares down, the price of groceries down, and the price of rent down? Let's go over those elements right tonight. First, let's understand if you don't get them down, you don't get rid of inflation. You don't get those three things down, you don't get rid of inflation. And if you don't get rid of inflation, guess what happens? You still have inflation, and now you have higher interest rates. Problem. It's a big problem. So let's go to each of them one at a time. The landlords. Is there a way to get landlords to reduce the price of rent? Not really. There's no real way to get it to happen. The landlords are private individuals who own apartment buildings, the vast majority of them, and they do what they want to do. And if they have the ability to raise the price of rent, they'll raise the price of rent. They don't even care if the apartment's vacant. They'll just keep a higher price of rent despite what everyone complains. So there's no vehicle, federal government or J-POW, to get the landlords to reduce the price of rent. Let's go over to the next industry, the airlines. This is our best bet. The airlines are regulated by the federal government. The federal government, since day one, should have been bringing these airline executives, all of them, in for a congressional hearing. Why? Price gouging. Let's look at the storyline. The airlines initially rose the prices in spring of 2022 when their costs were going through the roof. And they were going through the roof. Supply chain disruption. Gasoline, jet fuel went straight through the roof because Putin invaded Ukraine. International price of Brent crude went through the roof from $80 to $110. What also happened at the time? Salaries were going up a little bit at the time because there was hard abilities to get employees at the time. But now this is December. Where are we on those costs? Well, jet fuel is the cheapest it's been in the entire year. In fact, it's almost the cheapest it's been in the last 2 years. International price of Brent crude is now at $80 a barrel. We've not seen that level this low this entire year. We're down from 110 to 80. So that excuse for higher costs, gone. What about the salaries? Are the salaries still going up? No, they're not raising people's salaries by 30% year to date. So no, they're not raising those at all, like those levels. So takeaway is that the airlines are not enduring higher costs anymore. They're charging of 33% year to date higher plane fare tickets in the latest CPI report is not to offset higher costs. They don't have higher costs anymore. They're just price gouging. Now, ultimately, they're able to do it because the consumers are willing to pay for it. But will they stop doing it, or will they stay at those levels? JetBlue recently said that the demand for travel has dropped off significantly since the summer, but we don't know what significantly is. It's one of those words like close and far. Are you close or you far? Are you 2 minutes away? You're 2 hours away. We don't know if it's going to fall off, but in seeing the CPI report from Monday, it's up 33% year to date. So that is not falling off anywhere. So what do? You bring them all in for a congressional hearing. Congress should be bringing all these airline executives in for congressional hearing because the airlines are regulated by the federal government. The airlines went to Congress, asked for stimulus in 2020. We're going under. We're going to lose our shirt. Okay, now you're not losing your shirt. Now you're price gouging. You're asking 33% more year to date when your costs are not going up 33% year to date. Why? Because the consumer is willing to pay for it. Well, maybe the consumer just has to fly because they got to go somewhere, and that's the only available flight. It's not all travel and leisure. A lot of this is they got to go get somewhere, and that is the only available flight, and that's the ticket they bought. Let's go to the third industry, the growers and the groceries. These are the farmers that asked for stimulus in 2020 and got it several times with Javita Carranza. And these are the groceries that are unionized and in some regards are subject to trade practices, and some of them are trying to merge right at the time of this broadcast. Well, what they're doing is price gouging as well. They should be brought in for a congressional hearing because what are they doing? When you look at the situation, a lot of these grocery items are insanely through the roof. A head of lettuce is up 30% year to date on the latest CPI report. The CPI report on Monday was just really shocking. I mean, you look at some of these items, you say to myself, why are the eggs still up? Why is the milk up so much? It's unjustified. Let's look and see what that CPI report said on Monday. So Jay Powell got appliances down, 1% down, used cars down, 3% down. He got computers 4.4% down. Good, Jay. And car rental, 6% down. Television sets, 17% down. Smartphones, 23%. Good. The consumer goods got down. But the eggs, 49% up. In the latest CPI from Monday, airfare, 36% up. Butter, 34% up. Lettuce, 20% up. Cereals and baked products, 16%. Milk, 15%. The cows aren't working that much harder. It's unjustified. And that is why you got to watch the shows. Finally, tonight, I want to thank the viewers, you, who joined me in that LALATE live show 2 nights ago. I said to viewers, I want to expand the coverage on this channel. What do you want? They said, get more into a single show. Get more into a single show, cover all the same topics, but make it more dense. Expand the coverage, they said, include stocks, includes bonds, include the markets, include as much information. Because as Lynn Glenn brilliantly said, I'm here to learn. I'm here to learn as much as you can teach me and teach me a lot more. I love that because that's the spirit of this channel. This is a channel that is here to teach you as much as you can learn, because the more you learn, the better you are. Remember, it's a week in which everything you were learning on this channel last week happened. You were learning last week that Jay Powell is going to announce a raise of 50 basis points. He did. That the market is going to go up the day he did and then down the day after he did. It happened. You learned last week or earlier this week from Goldman Sachs that the retail sales number is going to be weaker. It happened. You learned that in February this year that the U.S. economy was going into recession, as I was the only American broadcaster to record that and predict that. And now everyone says recession. The only dispute is hard versus soft. Tonight I'm saying very clearly it's going to be hard 2 years, as I always have said, and it's not going to be a soft landing for Jay Powell. It's going to be a hard landing, and you're learning all that. That's why you're here. And I look forward to seeing you throughout the night as the programming continues. Stay with me and keep on getting all those incredible stimulus checks. Go right in this video, become a member, Purple Hawk, Purple Power Casino VIP. And for the shores of Santa Monica, California, God bless you. Keep on getting as much stimulus as you can. Keep on watching all the shows. Stay informed, stay focused, and stay with LA for more.